Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, it's Phil Tarrant here. I'm the host of the Smart Property Investment Show. Thanks for joining us. I've been burying my head in some numbers this morning, just having a look at auction rates. And if you watch the TV or listen to the radio or even read on the Smart Property Investment Show, auction rates are always a factor that come into account when you're looking at performance of market. So what I've done, I'm going to share with you a summary of this weekend's auctions rates. So we're talking about Saturday and Sunday. Today is Monday. And I'll read this out. This is from CoreLogic, Property Market Indicator Summary. And just bear with me. Let me read it. There were 3,400 homes taken to auction across the combined capital cities this week, returning a preliminary auction clearance rate of 66.9%, overtaking last week as the third busiest week for auctions so far this year. Last week, based on the final results, 60.9% of the 3,390 auctions held recorded a successful result, the lowest clearance rate since late 2015, early 2016. Once final results are collected, the combined capital city clearance rate tends to revise down, so at this stage it's looking like the final clearance rate on Thursday will be in the mid to low 60% range for the sixth week in a row. Sydney and Melbourne, the two largest auction markets, have seen clearance rates increase week on week after last week saw both cities recording their lowest clearance rates for the year so far. However, as usual, these clearance rates were revised lower over the week. Over the same week last year, a total of 3,398 homes were taken to auction across the combined capital cities. A clearance rate of 73% was recorded. Eric Brown, my guest on today's show. Welcome back.
Thanks, Phil. Doesn't really affect me, mate, because if you're building quality property, the buyers will come.
Is that what you reckon, is it?
That's what I reckon, yeah.
I do a lot, and CoreLogic does a good job, and I get this stuff every week, and I read it, and it makes my head hurt, right? I go, okay, that's important, yes. What does it tell us? It tells us some trends, but what does it mean to me? And how's it going to help me do what I need to do better as an investor? And you got to be pretty careful with the information you need to be able to make those decisions, right? Yeah,
and it confuse you a lot. If you listen to all the data out there, your head just spins around, and in the end, I think it leads to procrastination, which is not a good thing if you want to be a smart property investor.
That's good. So I'm going to tell you from this. Sydney and Melbourne, the two lowest auction markets, have seen clearance rates increase week on week after last week, saw both cities recording their lowest clearance rate for the year so far. So I'm going to take that as Sydney and Melbourne are a little bit higher this week, but last week was the lowest it's been this year. So auctions are quite soft in the Sydney and Melbourne market, and collectively, auctions are coming off quite a lot.
I'd probably say there's more stock on the market though coming into spring, wouldn't you? This is busy time.
Well, I think the problem is that there's not enough stock on the market to shift properties, and the properties that are going up for auction aren't moving as much as what they used to. So it shows that properties aren't turning over, which means either reserves are too high or there's no buyers in the market buying these properties. Obviously, there's a million reasons why, but I take from this that the market is not as hot as what it used to be. So what does that mean for property investors, Eric?
Do your research. There's always pockets within pockets. So the Sydney, they're talking numbers across the whole of Sydney. There's so many different microclimates within that data that, I don't really worry about the numbers in Sydney as a whole. I like to kind of worry about the suburbs that I'm buying or developing in, and focus on them because they're completely different, and the quality of stock within those microclimates has a massive effect on whether you're successful in selling or buying.
So you got to work out what it means for you. What data do you need to make more informed investment decisions? I'll just quickly go around the grounds just while I'm on auction rates. So this weekend last year was 73%. This weekend, as in yesterday, was 66.9%. So it's off quite a lot, right? They're a lot slower than what it was last year. But I'll quickly go around the grounds comparing last weekend from the weekend prior. So Sydney last weekend was 66.2%. Last year was 77%. Melbourne was 69%. Last year was 76%. This is clearance rates. Brisbane was 57% versus last year 43%. So Brisbane's up considerably. Adelaide, 67% compared to 63% last year, so up. Perth, 38% versus last year, 27%, up. Tasmania, 33% versus 80% last year. And Canberra, 68% versus 72% last year. So, in summary, Sydney, Melbourne and Canberra, down. Tasmania, really down. Perth, Adelaide and Brisbane, up.
You know what that down means though? It's opportunities to buy. So
that what you reckon?
I think I've heard you say it before. The best time to buy is when you're financially able to buy. And with the market flattening off, I think there'll be a few more bargains in the mix. So if you're cashed up and you're ready to invest, now might be the time to start looking.
Maybe I'd go and have a chat with your mortgage broker. It's a lot harder to get money at the moment than what it was a year or so ago. And we'll chat about that today, Eric.
Yeah.
But every market presents opportunities. So if you're ready to buy and you can buy, make sure you're finance ready and go for it. Anyway, that's enough of auction results. I just thought I'd share that with you. The summary to make is that don't get too confused with all the data out there. Make yourself informed. Know what data you need to know about. Auction results are just one of many factors which can give you an insight into how a market is operating. Go and check it out. Just Google CoreLogic auction results. You can do that every weekend and make your own assessments. But there should be a whole bunch of other things you should be considering. So, Eric, you're back on the show. Last time you were on the show was 27th of September this year. It's about 2 months ago. And we spoke about it. And the podcast we did was called Dealing with Scar Tissue from Bad Investments, where you spoke about some of your history as investor, the good bits and the bad bits. And I highly recommend to our listeners, go and listen to that. Eric, one of the reasons why I like having him on the show is that he's very open and honest and frank about how he sees the world. And from an investor who's been in the game for a little while and has done good things and bad things, and is mature enough to be able to reflect on those bad things to use them for good things in the future, Eric is someone that you should be listening to. But during that podcast, we had a quick chat around your latest investment, your latest purchase, and this was a warehouse that you secured in Lilyfield in New South Wales. So what I wanted to do was just take 15 or 20 minutes today, mate, just get a bit of an update on where you are with that. So 2 months on, when we first spoke, you'd spoken about the buy, why you bought it, how you bought it, what you're going to do with it, and some of the challenges you had around sort of contamination in the soil and dealing with council and getting DAs in and all this sort of stuff. So go and listen to it. 29th of September, Dealing with Scar Tissue from Bad Investments is what it's called. Maybe you can switch off now, go and listen to that so you know where we're at. But Eric, what's going on 2 months on?
We're back. It's been submitted, so we're in council. We're just waiting.
DA's been submitted?
DA's are submitted.
So what is a DA, so people don't know?
Development application.
Okay, what does that mean?
It's a set of plans and specifications that you submit to council that has to be within the LEP, which is the Local Environmental Plan. It has to be within guidelines set by the LEP. And if you are within those guidelines, then the council then chooses to say you can go ahead and build what you want to build, or they knock you back, and then the process continues.
So the LEP are the rules?
Yep.
And then what you do is you submit to council saying, this is what I propose to do to develop my site, and they fit within the rules set by you.
Yep.
And then there's a bit of a...
Now, you can bend the rules slightly and you can go over the rules, and sometimes, most of the time, council will let you get away with one or two things that are outside the scope or pushing the rules of the boundaries a little bit. And that's where, fantastic architects come into play, because they can fight for you on certain things that you want to get through, like your floor to space ratios perhaps, or other items like that.
So the rules are the rules, but there is a bit of flexibility if you are able to make some compromises. And a good town planner, is that who assesses it?
The town planner at council will assess it. So with my latest development, I have engaged a town planner to back up the architect, and it's been very good. But
so you've got your own town planner.
I have my own town planner
to support your application to steer it through council.
Yeah. So part of that submission was a town planning report that my town planner, engaged by me, submitted to try and head off at the pass any of the objections that we kind of saw that council might throw up at us.
So the DA's lodged?
DA's lodged.
With council?
Yep. So we had a pre-DA meeting in the last 2 months.
So pre-DA meeting. So is that like a off-the-record chat, is it?
Off-the-record chat, yeah, which is actually on the record, but they can't give you a definitive answer whether you could go ahead or not. They make suggestions based on that pre-DA meeting, and then council kind of tries to get you to change your plans to suit whatever advice they give you, and hopefully for the developer, if you do match what they say, it passes through smoothly, but which is not always the case, which I'm sure we're going to talk about in a few minutes.
Okay, so the DA's with council?
DA's with council.
The council. So you've gone about strengthening your proposition with your development application with very good architectural drawings, engineering plans, all this sort of stuff, and you've appointed your own town planner to give you even more documentation and more clout to try and steer this through council as quickly and easily as possible.
Plus an engineer, like we said, plus an acoustic consultant, plus a traffic management consultant, plus a contamination consultant. So we kind of threw the book at this thing.
And is that all required, or you've gone over and above?
No, that's above and beyond.
Okay, and you've done that. Why?
To try and make council sort of look on the development as favourably as possible, I guess. There are a few, we're on the boundary, 3 sides. We're well over the floor to space ratio, so there's no way that council are going to approve it straight away. It'll have to go to a planning panel meeting. But you want that report that they put out to be as favourable as possible, so when it goes to the planning panel meeting, the planning panel looks on your development favourably.
So being over-prepared, over-planned, over-documentated should support a smoother transition to get the DA approved.
You would think so.
Okay, but it's not always the case, right?
Councils are councils.
Okay, so it's with the DA's there. When will you know whether or not it's going to get approved?
Oh, I just got off the phone to my council officer. I won't name him, but shout out to him if he's listening to this podcast. Very soon. We're hoping to get it into the December planning panel. But they did come back to us, council, and ask for some further information. So another structural engineer's report. They asked for additional shadow diagrams through every hour on the hour through the winter solstice. And they asked for some stormwater management reporting, which we had to go back to our consultants, get that all up to what they wanted, and then resubmit again. They only gave us 14 days, by the way. So if your team's not switched on, ready to roll, they wouldn't give us any extensions on that. I don't know if that's typical across all councils, but I kind of felt that was a little bit unfair because some of these things took 2 weeks worth of work basically to get it up to what they wanted. In terms, every hour on the hour through the winter solstice, I thought it was ridiculous because it's an existing form and we're not changing the existing form, but I don't know, I think sometimes you've got to realise that there's boxes that have to be ticked, and it's not the planner's fault for wanting to get those boxes ticked. There was just perhaps I would have appreciated a little bit more rational thinking in relation to the DA. But anyway, this is what it is.
Yeah, there's a level of bureaucracy with this, and obviously our councils have a responsibility to ensure the character of areas where people are building, and therefore they want building to be consistent with what's going on. And I know Lilyfield is an area which has a lot of heritage appeal, and they want to make sure it's okay. So I can understand there is a bit of bureaucracy from the councils to do this, but it comes down to your expertise and skills and experience developing stuff beforehand. So we always speak on the Smart Property Investment Show about having an A team. We talk about a buyer's agent, an accountant, a mortgage broker, etc. But if you're in the game of development as an investor, it's a different sort of A team, and you've spoken about them already. Yeah,
well, finance, I got caught on finance. I think I mentioned that to you. We're paying 10% interest on that through a private equity funder. I'm trying to come off that as quick as I can. 10% in this day and age is double what you would expect to pay. So that's kind of hurting a little bit. And, potential for someone who wasn't aware of that, or you ran into it on a fine line in terms of funding, it could really trip you up. And I wouldn't want to try and resell a property that had a council stop work order on it and was incomplete, and a commercial property that you're trying to change into residential. So you really want to have your funding in line first. I'll probably hopefully have some good news for you in the next podcast, because I'm very, very close to getting someone to across the line for that, which will be good, which will incorporate a construction loan on top of that.
Okay, and a construction loan will probably be cheaper than 10%, right?
Well, hoping 4.2, yeah.
Oh, that's pretty good.
Yeah, that's awesome. So
would you say that the development that you're working on right now is on it's a bit of a hybrid, isn't it? It's not like, here's a block of land, I'll build a house on it. You're trying to transform an existing warehouse, which is industrial, into a residential, a set of residential properties. Yeah, and that comes with myriad of problems that are associated with a commercial block. How do you value it? The residential valuers we've seen through had no idea how to value a commercial property. The commercial valuers, because you were changing back to residential, couldn't really see the vision of what we were turning it into, and didn't know how to value residential at the end of the completion. So it was kind of a real juggling act to try and get the values right.
And of course, finance was difficult as well. So finance, back to the architect, very, very important to have a great architect. Don't just pick the cheapest architect, pick someone that's going to fight with you, because these processes can get held up in council. And, going to planning panel meetings, I've learned through experience to have someone by your side that stands up and actually fights for your cause, and can articulate in architectural language what the council wants to hear. I mean, it made a massive difference to things I've done in the past. So really good architect. Then I think you can add on a town planner on the top, and then there's so many other things you can add. Like we were under a flight R20 to 25 flight path, so we needed an acoustic consultant. We engaged a very good one with that. I've had some interesting stories I'll tell you off air about my acoustic consultant's experiences, but shop around definitely. There's such a different level of expertise for these consultants, and it pays. It pays to do research, and it pays to get someone you trust, or someone who's worked for somebody else and done a really good job. And having them beside me, next to me when we fight this through council is really reassuring. I think I'd be, have a few sleepless nights if I didn't have this team behind me to help me.
So I'm hoping from this podcast, a lot of listeners out there who are thinking, I could give development a go, and I'm experienced, I can go out and do it, and watch me. What would be your recommendation around development?
Man, have balls of steel, I reckon.
Yeah. The fortune's the brave, does it?
Yeah, but without great risk, potentially you don't get the great rewards. So it's all about your appetite for risk, really. And development's not for the faint-hearted, and it's not for everyone.
A lot of people go broke as a developer.
Even developers that have done a couple before and then jump into something a lot bigger, you find a lot of them go under because there's just so much that can go wrong. So if you don't really have a particularly high risk appetite, I would just say no way, leave it alone. Stay to something safe. If you do want to do things a little bit more risky, then start small.
Try a reno first.
Yeah,
at least,
don't jump into something big, and then talk to people who've done it before and ask for their honest opinion. Don't listen to all that, gold bling watch, flash Ferrari driving. This is the story. This is how my development's easy. It's far from that. It's very stressful, particularly with money. And now that the lending market's tightening up, it's there's another element on top you got to add.
Yeah. So how much of your physical time is this development taking up? So not counting what your family time and all sorts of stuff. So when you're working, how much of your
now it's in council, not much. I mean, probably maybe 10 hours last week when we had to hurry around and just follow up the consultants, because it's just following up the consultants, making sure that they're going to get their submissions in on time and their resubmissions. And so there's a lot of phone calls and just making sure you hit those deadlines, because if you went over that 2 weeks that council gave us to resubmit some information, I mean, you miss your opportunity, your proposal gets rejected, and then it's a whole another fight on top of your hands. So you got to make things as easy as you can, and that's in terms of what physically, my time, it's not a massive amount, but it's just being organised and making sure my suppliers and my contractors are organised enough to hit those deadlines.
And how much of your mental energy is it taking up?
Oh, a fair bit, yeah.
Yeah. So there's two things there, really. It's like the time taken to do stuff associated with it, but then that's the thinking time. If you think about your brain and what you can think about over the course of a day, it's a big part of it, right?
Yeah, probably 6 hours a day, I reckon, I spend pondering and tossing up things in my head and worrying. And
is it more worry, is it more excitement, or is it a bit of both?
Oh, it's a bit of worry at the moment because we haven't gone through council, and council's come back asking for a lot of other things. And it is an unusual development, I'd admit that, but that's where I see the beauty in it. It's going to be a warehouse style conversion, and some of them on the market have had amazing success lately, but they're not every day.
It's hard to get there though, right?
Yeah.
So what did you pay for the site?
1.73.
Okay, and all said and done, when you've got it finished and it's looking brilliant, what are you going to have?
Two at 2.2, 2.3.
Okay. Each. Okay, so 4.5 million. Okay. On a 1.7 purchase, and your build costs will be, what do you reckon? All said and done, including holding costs.
Oh, holding costs will be pretty
high.
Like I said last episode, the broking fee was 2.2 and the lending fee was 1.1. So there's 30 grand, 36 grand straight away just in lending fees, instant, like right up front. Then you've got to add the interest at 10%. That's $10,000 a month.
Yeah.
So the holding, it kind of depends, and this is where the tricky part comes in, because your holding costs will all depend on how long it takes to get through council. The longer that takes, the more holding costs we've got. And when you're talking about $10,000 a month, if council pushes it back for 6 months, there's $60,000. So it can knock you out, really. So yeah, our position has been, cash position has been going backwards over the last couple of months, and that's also kind of scary, because you've got to have those reserves to be able to, accommodate that backward movement until we can push until we can refinance and get it on a more reasonable rate. And then build costs probably, I'd like to say under $1 million. And I'm pretty confident I'll get it under $1 million.
Okay. And you work as a builder, which will help.
I'm a commercial builder, yeah.
Yeah, okay. So that's
I can't do it myself.
But that's a big tick in terms of knowledge and understanding of how the building game works.
Yeah.
Yeah. So how do you weigh up then that you say, well, if it takes another 6 months that I've got to hold this property, that means you're going to look to probably sell 1 or 2 of them 6 months later. So you could argue that, well, that 6 months going to be brilliant, because hopefully the market's gone up by another how long during that, right? So
can I borrow your crystal ball?
Well, this is it, isn't it? So are you confident at a point in time when you can realise the investment you've put into these assets in terms of your time and energy and, human capital, all this sort of stuff, that it's going to be a good time to sell one of these? Are you going to sell them?
Well, no, we're not going to sell them. This is part of our strategy
Okay.
is buy and hold, and we want a passive income through property. We want to replace my wife's income. So, yeah, we're going to do as much as we can to buy and hold. There'll be great rental returns there anyway. We're pretty confident to getting pretty close to, we'll be slightly negative to start with, but we're pretty confident.
As an absolute, so
purchase
build,
and construction.
Construction. Okay, and all the costs associated with like DAs and town planners and everything. So you're pricing up everything, right?
Yeah.
So when you do take it to market, it will be just slightly off, neutrally.
Yeah, it'll be negative, but not a massive negative hold.
Yeah. But then over time, it'll go positive.
In 2 years' time, we're hoping that the rents don't have to go up, but if they did, that'd be a bonus, of course.
And that sort of product that you're creating is quite popular in a Littlefield area. So that's an important point, right?
Yes.
So you're not creating something that no one wants.
Absolutely.
Okay.
And that was the reason we went from 3 smaller 2 bedrooms into 2 bigger 3/4 bedrooms. On face value, you would think you'd make more money selling 3 2 bedrooms rather than 2 3 bedrooms. I mean, that's what I thought to start with, and ran through the numbers, and that's what we're crunching on. The pre-DA meeting with council actually suggested we go back to 2 because of just population, usage of the current infrastructure. But when we went back to the property managers and the selling agents, it actually worked out pretty much even, or probably a little bit higher, to have the 2 bigger 3 bedroom. Definitely easy to sell, definitely easier to lease. But then you've got 1 less kitchen,
So cheaper to build.
Cheaper to build, yeah. Less bathrooms.
As a percentage?
I couldn't tell you, but maybe 60,
considerable,
maybe 60, 70 grand cheaper.
Okay, that matters, right?
Yeah.
So for you then, because of your goals with this development, as in you're going to hold on these properties as a generator of income, you want to build these things as quickly as possible. So you want to get your DA as quickly as possible, build them as quickly as possible for as cheap as possible, but not so cheap that it affects the actual value of the property, what it's worth, and what you can rent it for.
Yep.
So there's 4 different variables there that you've got to balance to try and get right.
Yeah.
So what's your number one priority then, in terms of, is it making this thing worth as much as, you can't have the fastest, the cheapest and the best all at the same time, right? So what's your priority?
Priority 1 at the moment is to get this funding in order, because that's what's keeping me up at night. The watching my surplus cash get closer and closer to zero, and eventually we'll hit zero, and we'll have to make a pretty tough decision if this doesn't get through within the time frame we're hoping for. So that's my main worry that's keeping me up at night, and I have had a few sleepless nights because of that. And then if I can, I do have an option with Yellow Brick Road Commercial to capitalise the interest.
Okay.
And what that means is, if I take them up on that, I won't be paying, the interest gets added after the properties are finished being built, which means I won't be paying the interest on the build costs until after they're ready and I've got them leased out or I've got them sold.
So they capitalise that holding cost into the loan, so you just have a bigger loan at the end of it.
Bigger loan at the end of it, yeah. They add the 120 grand, whatever it is, on top at the end. Okay. So that's an option. I think you'd probably pay in percentage and points on top if you took an option up like that. But we're still at the negotiating table with the funder.
So if cash flow is a problem, that would be a good solution.
Yes. Yeah.
So priorities is just get the DA in.
My main priority is my funding.
Funding?
Yep. Get me off that 10% is my funding.
And then you can do that prior to DA?
I can do that prior to DA, yeah. It's been a struggle, and I've had to go through two brokers basically and a lot of different products. And we're pretty close with Adelaide and Bendigo Bank, but they pulled the pin in the last minute because they saw a Google Earth photo of the property 4 years ago and kind of tightened up a little bit.
Do you reckon that's the reason why?
Yeah, that's what they told me, yeah.
Okay.
Said the head of risk saw it and said no. And, being in Adelaide, I guess kind of maybe they didn't understand, sometimes the Sydney market is very different to the Adelaide market. And anyway, that's what I'm telling myself.
You rationalise that however you want. Okay, so get the funding sorted out.
Funding sorted, DA approved.
DA approved, and that's your green light.
That's my green light.
Okay,
yeah.
That's where you start doing stuff.
And then I don't actually, until I start the construction, the extra pressure of the construction loans won't come on. So there's not such a rush to get it finished as quick as possible, particularly if I can get off that 10% and back down to more like a 4.2 or something like that.
It gives you some breathing space.
Yeah, then I can sit and recover and make sure I've got it right, and then get all my ducks in line and then go. When I start the build, I want it to go quickly, but I don't. So it's more important to start and finish, to not start quickly, but once it is started, to finish quick, because that's when you start adding on all those construction loan costs. And
is there anything that's going to stop you moving quickly when you get the green light?
No, I think builders are busy at the moment.
You've got a builder sorted out though.
Yeah, I've got a builder lined up. Yeah, but the funny thing is, because we haven't got the green light from council yet or been through the planning panel, I can't give them start dates. So saying they're lined up, if another job comes in the meantime, they'll take that and move on with that. So
and what sort of contract will you do with the builder?
Fixed price lump sum.
Okay, so what does that
think
mean?
I have to for the funding.
Okay.
I don't mind the principal and interest. I don't mind percentage or cost plus contracts with a builder I can trust. And I can't do it owner builder because we've already done one within the last 5 years as an owner builder, so that rules that out. It just makes the funding a lot easier if you have a proper lump sum fixed price contract.
So it's a fixed price
lump
plus
sum.
a lump sum.
No, fixed price lump sum. So it is a lump sum, and you can't go over it. That's the cost that you pay the builder to build the structure.
Okay, so you need to be really clear about what your expectations are, because if you start doing variations on using building term during the period of that, he's going to just go no.
Yeah, well, he'll tell you no. The problem is the funder won't fund that, because the funder will only fund it based on the specifications at the time when you fund that. That's part of the construction loan, and they'll want to know when the milestones are, when the payments are coming out. That's all pre-planned, so you can't deviate from that plan, or the funder starts getting nervous. It's all about funding at the moment.
What sort of flexibility do you have to change the design when you start going? If you when you stand in the building, you go, oh, I didn't realise that, but wouldn't that be good if you just shifted that to that?
Well, I think if you fund it yourself, you've got a bit more flexibility. If you have to go through the funder for that, and they're massive, they're big changes, then you might have difficulty. In terms of changing walls around, you've got a DA approved for a certain design, so you can't really change that. But in terms of changing colour of tiles or toilet, it's easy. You just do it on the hop, and hopefully you're not adding a whole heap of cost to it then you have to go back to the funder and ask them for more money.
So as someone who runs commercial building projects for a living, how do you get the balance between being right involved and being part of the process to get this thing built, or you're going to try and disconnect yourself with it and just let the builder be the builder?
Yeah, I've done a bit of personal work over the years, and I think one thing I've learnt to be successful is you have to be able to delegate with trust. So I have a builder that I trust, and when I give him the job, I'm going to try and not micromanage him, because I think I don't appreciate being micromanaged myself. So if I can give him the green light, but the thing that I'll have to get right is right at the start with the architect, is making sure that I'm comfortable with what they're specifying and the fixtures and the fittings. And
is that the architect's job to be the guy that does that?
Yeah.
Okay.
Yeah.
So does it need a project manager, the job, or is that the job of the builder, the project manager?
Well, you can have external project managers if you want to engage one.
But will that be you, will it?
That will be me in this instance, yeah.
Okay. And is that something you can fit within your typical busy day?
Because because I trust the builder so much, then that's not an issue.
You've got a level of flexibility.
Yeah. If it was someone, I wouldn't say it's not a good thing to engage a independent project manager, though. I'd say definitely check it out if you're interested in doing it, particularly if you haven't done one before. I think it's a great option, and someone just manages it for you. I wouldn't write it off.
Because there's a skill to being a good project manager versus a skill to being a good builder, right? Two very different things.
Yeah.
So a project manager needs to have good processes, systems, planning procedures, delivery, communication skills, time management skills. It's just project management. It gets hard. Whereas building, once you get started, how often is there problems? So there's wet weather, stuff doesn't arrive on time. A lot of things you can manage with good project management.
Yeah.
You can't manage
the other
weather.
good thing about a project manager, an external project manager, is that you're taking away the emotional connection to the build. So building your own house and you're standing there, it's always more difficult doing something when you've got an emotional connection. You can't make a rational decision based on, some other factors like cost or time. When you're emotionally attached to the process, and it is always a lot harder to make those decisions. So I think in an instance where you did want to detach yourself emotionally from the build, that'd be a great opportunity. But project management is what I do with my job, so I'm comfortable doing that.
So with this particular, and I know that you're a craftsman and you like everything you do in a commercial sense. It's a quality product and it's important to you. So for you, are you emotionally connected with the deal, i.e. making money and realising your strategy to creating an asset which will help you generate income? But you got to connect that with, are you emotionally connected with making a cool building that looks great, that you can stand up and go, I visualized that and I made that happen. Where's your connection going to be?
I'm more connected to the building, actually, because I know if I create a quality product, people will come and they'll spend top dollar in the area that I'm building. People will spend top dollar for a quality product. But sitting on my other shoulder, you can't overcapitalize like anything. So you have to be realistic. That's where an architect comes in as well. So they will design things and design specifications to suit your budget. So you may not want a $6,500 piece of marble in your kitchen. There's options that you can go to get a different piece of marble that might be $1,500. So there's lots of options you can play with at the specification stage that can keep your costs under control. So you've got to sort that out then. Yeah, right from the start. Right from the start, and then stick to it.
So for people who aren't able to visualize what something will look like, being able to translate a drawing on a bit of paper to what a final result is, it's quite a hard thing for a lot of people to connect with sometimes, right? So you do 3D rendering and all this sort of stuff, but
I'd say real life touch and feel. So my architect, with our last project, took myself and my wife shopping 3 Saturdays in a row. Took us through Dank Street, through Alexandria, and so many different shops and just
Did you
places.
enjoy doing that?
I loved it. There were places I'd been
that, I reckon.
that I didn't even know. And I was thinking in my commercial head, shivers, I can use that for this product. I can use that product for this job. And it was amazing, and it was lots of fun. There was no pressure to buy. I would have enjoyed it if he had said, right, now you've got to spend the money and buy it. So it was just looking, and when he came back. So
it's not like a Moroccan rug seller who takes you to a place and says, look at this thing, and you feel obliged to buy.
Drink some of my tea.
So your architect wasn't aligned with any of the places that he took you.
No.
It was completely non-connected.
So
it's not him going, hey, come to this job, buy that. It's really good. He's getting a little
antique
kickback.
Rug.
Yeah.
No.
But that's the important thing, right? You got to make sure that your A team, so your development team, is 100% trusted and operating in your best interest.
Yeah. So back to the architect, I definitely would go with an architect that has a fixed fee service. So usually architects sometimes work on a cost plus basis. So the more expensive the build cost is, the more money they get from their fees. So if you can find an architect that has a fixed fee, happy days. Because
no matter the other way, right? They go, you do need that marble rather than this other.
This is going to look amazing. Then they just sell you on the aesthetics of the thing. Yeah. I think good architects also have skills with knowing what works practically, because that's the beauty of it, when a practical solution is aesthetically beautiful.
So that's the architect's job, right? To be creative and thoughtful and a little bit, not cut corners, but to get the best result for the minimum amount of money spent. That's what you want, right?
My bathrooms, in the last one we did, we couldn't afford marble stone for the tiling, and he took us to a ceramic tile shop that had tiles that looked exactly like marble. We stuck them up on the wall. The job is phenomenal. It's beautiful, and most people that walk in there don't realise that it's faux marble.
There's nothing wrong with faux marble.
Yeah.
Farble.
Farble.
Farble.com.au. There you go. That's good, Eric. So are you happy with where it is at the moment?
I'm nervously excited.
Yeah.
Yeah, I'll say that.
So we get it done before December, all this stuff?
Well, that wasn't a positive conversation I just had with the planner before I jumped on air with you, but I'll put some more pressure on him and we'll see how we go. And
Just on that note, so you want him to be an advocate rather than you don't want to be a nuisance to him.
That's why I mentioned I was coming onto the Smart Property Investment Show.
Yeah, I think it's got to give you some. But how do you, because I overheard the conversation, I wasn't really listening, but, it's an important relationship, right, to make sure that you're connected in. So you understand and you appreciate the needs of his job, what he's trying to do. He's trying to operate within the LEP and the rules or the direction of the council, and that's all cool. He's got a job to play. So how can you be a better inverted commas customer to them to make his job easier, because you both want the same thing, right? The council want to create really good housing that people want to live in and make the place livable and continue investment, all that sort of stuff. You're there providing or creating this housing for them. So you've got the same essential goal, but you're doing different things about it. So how do you work better with council, do you think?
I think the more prepared you can be and the more questions you can answer for them before they have to think about asking you those questions, it helps them. So the more detailed your submission can be, and actually it's just the more detailed you can be when you submit that, I think the less pressure they feel to realise that maybe you do know what you're talking about, and there's less are left up in the air.
So you want to reduce the ambiguity and try and deal with facts as much as possible.
I think, like you said, they've got a job to do and you've got to realise that, and, always try and put yourself in someone else's shoes and realise that they're just getting paid to do a job. So I try never to burn your bridges, because you never know where they're going to pop up next for your next development, and try and control your emotions when you're talking to them. And but be frank and open, I think, is the other secret. You've just got to, if you feel something's not right, you've got to tell them that you feel it's not right in a nice, friendly, but frank and open way. And
transparency in all this, any negotiation is absolutely critical.
Yeah.
So okay. So you're waiting for a DA and you try and get your funding sorted out.
Yep.
Okay, they're the 2 points. So when are you going to come back and tell us about it? Is it a next year thing?
I reckon it'll be January, when I can tell you that we've made it into the January planning panel meeting, and we've had a success at the planning panel meeting. We've got our funding sorted, and now we're ready to start building.
So there you go. There's your goals.
There we are.
There's short-term goals. It's good goal. It's good goal setting, isn't it? Short-term goals, get that done. Mid-term goals, get this thing built. Long-term goals, create really good income off it.
Yeah.
There you go.
Easy.
Too easy.
Easy peasy.
Well, hope it goes well, mate.
Thanks, Phil.
I appreciate your frankness and your honesty and your ability to share this, because a lot of investors are in the same boat. Well, they have been or they will be at some point in time. So if you're going to go down this path, you need to make sure you know what you're getting yourself into. You need good rigour, and you've got to be quite robust and resilient, I think, is the most important thing with this, as well as making sure you've got your funding sorted out as much as possible.
And some good support networks.
Good support networks as well.
Thanks, Phil.
It's handy. So keep it up. Thanks, mate. I do enjoy it. And if you've got any questions for Eric, if you're to develop or start developing or are developing, or if you had some bad experiences developing or good ones, want to hear them, email the team, editor@smartpropertyinvestment.com.au, and we'll try and answer them on air. Maybe we can do a Q&A, Ed.
Yeah, sure.
Anything you've ever wanted to do about building. And maybe next time around, I don't know who they are, but this architect you've got, maybe we can get him in there as well, share his insights as well. I think it'll be good to for our listeners to actually understand these people who are batting on your side and helping you get through this. So anyway, we'll recap in 2 months' time, which will be the end of January.
Yep. Merry Christmas.
Merry Christmas. Yeah, Eric will be back. He'll be let's see how he's going now. I think he'll be all right. Remember to check out smartpropertyinvestment.com.au. If you're not subscribing to our daily market intelligence, you need to be if you want to be informed and educated about what's going on in property. smartpropertyinvestment.com.au/subscribe. Remember, on all the social channels, just search Smart Property HQ. You'll find us. And those reviews on iTunes, please keep them coming. We love 5 stars if you like what we're doing. And please leave a note there as well. The team really do enjoy it. You might just hear me banging on all the time behind the microphone, but there's a big team of people behind here who are very talented, who make this thing happen. So they do appreciate knowing what they're doing is making a difference. And we want to keep building and growing this community. Until next time, we'll be back then and we'll see you then. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.